I've received multiple questions of similar vein or of similar theme asking me, hey Chiking, Alibaba is back into the $80 range again. So are you adding? So similar to what the screenshot suggests, do you plan on adding shares at $87 price, considering your average is around 120? So for context, for those of you who don't know, Alibaba still remains the single largest position in my portfolio. I haven't been adding, I haven't been trimming, even after the recent run up of 120. I didn't trim any position, I was essentially doing something else, and then the price currently just started tanking below 90 again. Did I regret it? I mean, in hindsight, if everybody knew how the stock price is going to react, then sure, I could have sold out all of my position and then buy back in again. But I'm not really trying to play the game of trying to get that extra premium or to earn that difference. Essentially, I'm buying and trying to hold for the long term, assuming that my entire thesis around Alibaba or around Chinese tech is going to come into fruition. I'm expecting probably a double triple bagger, but that's besides the point. So I think just to provide you with more color in terms of my current portfolio allocation, you can look at it on a cost basis at least. Alibaba, two specific positions. BABA is the US position, with 9988 being the Hong Kong position. If you to sum both of them up, it's around 60%. Yes, you heard that right. 60% of my portfolio is in Alibaba. I think my current cost price of Alibaba is around 116 if I had to combine both exchanges. So with that being said, I think given the current breakdown of my portfolio, you can see that I'm extremely focused in one country or one geographic region, which is namely China. And yes, I'm not ashamed to proclaim that I'm a huge China bull. I think that there's a lot of rewards to be reaped there. I still think that valuations are unfairly punished, and I'm still waiting on my ass, waiting for them to be both revalued and for the markets to essentially recognize that they're being unfairly punished. But that's just my own thesis on my end of the stick. Now, looking at the entire portfolio breakdown or allocation itself, 60+% is in Alibaba and 9.1% is in Chinese banks, and also 7.2% is in KWeb. So if you do really just sum everything up, I think I have more than 90+% is in China. Oh, wait. TSMC is 1.6%. So if you were to consider Taiwan as part of China as well. So on a portfolio basis, I think I have 95%, 90 to 95% overweighted on China. Then I do have other smaller positions like Google, Amazon, Vanguard Total, and I actually added a new position, Adobe. So do look forward to my next portfolio update video because this is actually a new addition to the portfolio. Anyway, I think just to circle back to this question on whether am I going to be adding to my Alibaba position, the short answer is no. The long answer is a lot more complicated. But I think judging the portfolio from an outsider perspective, many of you are going to comment saying that, oh, you're reckless, you don't know what you're doing, you're ignorant, why are you not diversified, etc. etc. Truth be told, this amount of money that I've sank into the stock market, I'm ready to lose it all. And judging from my age, I hope that I don't look that old. I'm perfectly fine to restart from zero. But that said, I think I'm of the opinion that especially when your portfolio size is much smaller, it's easier for you to try to exploit those unfair advantages or exploit those opportunities. And in this case, I'm definitely trying to position or steer my portfolio in a certain direction, and I'm betting in a certain direction that my thesis would play out. So in this case, I've been extremely overweight in many of these Chinese names, and specifically in China, which is why it resulted in this portfolio. So do I regret my decision? At least for now, I'm not really, but maybe 5 years later, if Alibaba continues being submerged underwater and I'm deep in the red, then sure, I guess I've made a biggest mistake of my investing life as well, like manga. But I think the longer answer is that I'm actually constantly adding to my China exposure as well, but not by adding shares. So I believe many of you out there have been toying around with the idea of playing around with options, and I'm no different. I'm also a fellow retail shareholder. So in this case, I've also been playing around with selling puts and selling calls. Not so much on selling calls because I know that a lot of the positions that I hold, they have great amount of volatility, especially you see when the China reopening narrative flips on itself. There was a huge rally up like 30, 40 and sometimes even 100% within a short span of like 1 or 2 months. So I tend not to sell call on my positions because in this case, I don't want to just earn that small premium while risking selling my entire position away. But that said, I have been selling a lot of puts on many of these Chinese positions. And I think this entire idea of selling puts is slightly tricky, and I'll explain to you my thought process. But before I talk about how I think about this entire selling put issue, this is just my current 3 outstanding put positions that I have. I've been rolling, I've been playing around. I've already closed multiple positions back in December, January, and Feb. So this is the current outstanding ones that are left in my brokerage account. So for those of you who don't know how to read this is essentially selling Alibaba puts on the Hong Kong market. 23, 12, 28 means that this is in year 2023, December 28, the expiry date, and then the strike price is $52.50. So this is a put position, and I'm currently probably very green because the strike price is $52.50, and I think this is like 60-70% up, if I'm not wrong, or 70-80% up. So I honestly think that by the end of the year, Alibaba is not going to hit 52.50. But touch wood, in the case that Alibaba really is below 52.50, so in order to calculate my actual price on acquiring this Alibaba share, you have to deduct away the premiums that I've received, which is 380. So if you deduct 380 from 52.50, that's around $48 plus $49. So in this case, if I'm really assigned this option because Alibaba is trading below $49, then yeah, I'll be acquiring 500 Alibaba shares on the Hong Kong exchange for $49 each. And then moving on, this is a 10-cent put, so TCH is 10 cent on ticker symbol 0700 on the Hong Kong exchange. So expiry date similar, 28th of December 2023, and the strike price is at 300. So in the same vein, if you really want to know what's the actual price that I'm acquiring the stock, in the case that I'm exercised, you just take $300, which is the strike price, deduct away the premiums that I receive, which is $16.45. So in this case, my actual acquiring price, if this were to assign to me, is probably closer to around $283. 283, 284. So I'm perfectly fine with buying Tencent at 284, by the way. And similarly, I'm perfectly fine with buying Alibaba at like $48 or something like that. I mean, sure, if there's this whole delisting thing and whatever, all these are on the Hong Kong exchange, so I'm not really affected. And I think last but not least, I think there's this one more Alibaba put option as well. So this is on the US exchange. In hindsight, I've sold it a little bit too early. But I think my perspective was I wanted to sell this first. And then when the share price continued dropping, closer to the strike price, I will actually continue adding to this same options position. So in this case, this is an $80 put expiring in 2024, January 19th. So I'm currently down, I think $300 odd on this. The strike price, I think you guys cannot see. I'm kind of blocking the way. But the premiums I got was around $5.84. So I think including this additional $3.19, it's closer to $9 now. So $9 meaning if I were to sell a put option, the exact same put option today, 80 minus 9, my exercise price would be around, or my acquiring price would be around 71 if this put option were to be exercised. So I'm not too sure how Alibaba is going to fluctuate or how it's going to move from here on out into 2024 January. But I think the bottom line is this. If you want to be a writer of a put option, in this case, if you want to sell put option, number one, you have to be damn bloody sure that you want the stock, especially when the sky is falling down on you. I'm just saying that in the worst case scenario, it might look quite ridiculous for Alibaba to be trading below $50 because who knows what's going to happen. But in the worst case scenario, if Alibaba was to really be trading at below $49, they will be assigned to you. And by assigning it to you, you have to cough out the money to essentially buy the stock. If not, you'll just be considered leverage in your brokerage account. And number two, you have to be comfortable with the leverage. So unless when you sell the put position, you already have the sum of money being earmarked in your account. So let's take this Alibaba put position for example. So every single option is representative of 100 of the underlying shares. So by 100 shares at 80 strike, meaning that when the option is exercised, you have to cough out $8,000 because $80 times 100 is 8,000. So unless you have $8,000 cash sitting at somewhere, you will definitely be leveraged because the main bulk of your account will be treated as collateral. And in this case, I have a lot of time waiting for me because this option is actually expiring 1 year later or at least 10 months later out into 2024 January. So from this perspective, I'm not in a hurry to cough out this $8,000 to acquire this share because in 10 months time, who knows what Alibaba is going to do. It can go to 150, it can go down to 40 or $30. And even if it goes down to 40 or $30, as long as the option market is liquid, somebody is willing to take it off my counterparty, meaning somebody that bought this put option, sell it to someone else, I'm still fine unless somebody just exercised the option and I'm forced to eat the options up. However, even if I'm forced to take these 100 shares at $80 strike, there are still many ways to try to kind of repair the position. And one most common example is to roll the options down to maybe a lower strike price or even to a much later date. And I'm not going to go into the intricacies of options investing, but long story short, this is essentially how I'm managing my exposure. via all these put positions. And I've only been selling put positions on many of these Chinese names because I'm fairly confident and I'm also fairly prepared to essentially be assigned these positions, and I'm comfortable with the strike price. Meaning if they were to come at 80, at 52, at $300, I'm more than happy to take the position. And of course, you have to do your own analysis in terms of your cash flow and whether you have the money to essentially take all of them and to be assigned all of these outstanding shares. If not, back to my portfolio, I think the China exposure is getting slightly too aggressive. So I'm trying to manage the portfolio China exposure via using put option. I'm not going to buy shares outright anymore. And for all the additional money that's coming in, and if I were to deploy it into the market, I think in the US market, companies on my watch list are starting to get to attractive valuations, and I wish to start to acquire them more aggressively. But yes, that's basically what I've been doing with my Chinese exposure. So I think I've also received several comments asking me, hey, why are you doing it with lead puts? So lead puts in this case is probably out into the future, whether is it 10 months, 1 year, or whatnot. Because many people who are doing this willing strategy that are selling puts and selling calls, they tend to do it in a very short time frame because they want to maximize time decay. I think they usually sell 3 weeks to a month and they have a yield of probably 20 or 30%. I think in my instance, my yield is probably much closer to around 8 to 10 to 15%. So I have my own reasons for that. I don't want this video to be too long. So for those of you who are interested in my thought process, do feel free to leave in the comment section down below. I might consider doing a separate video to explain why I sell lead puts instead of a 1 month or 3 weeks kind of put. So with that, I'll see you in the next video. But more importantly, I will finally see you on the moon. Goodbye.